Hello guys, it's me Abdul FX Mentor. Welcome to the series tutorial for ICT concept training course by me. This video I'm going to explain about the optimal trade entry, which we always know as OTE. The optimal trade entry is based on buying retracements and example like movies up and down, and then movies of that level in the opposite direction. We also call it a break in microstructure, so to enter the optimal trade entry zone. The market moves in 4 different ways: expansion, retracement, consolidation, and reversal. In an optimal trade entry zone, we will focus on the expansion move and retracement. The OTE focuses on expansion and retracement like always, and OTE is also an entry technique based on the retracement of a price swing. Once we see an expansion leg, we weigh the price to retrace, and how far the retracement should be will be in an optimal percentage area of a retracement. So what are the levels of OTE? So 62, 70.5 and 79% are the OTE levels. This is called the optimal trade entry since it's the ideal spot to enter a trade for a higher risk reward trades. And to be more specific, price retraces to the area between 62% and 79% Fibonacci levels on your Fibonacci 2, with 70.5% is being the middle of that and essentially being the sweet spot where you could have the sniper entry. So the Fibonacci levels starting by here, you will use these settings, and you have to use it by setting up with your fib retracement levels as follows. So levels should be 1, and this is the 100% in description, and 0.618 is exactly 62%, and also 0.708 is OTE, which is 70.5%, which was the half, and 0.79 is 79%. So the 0 is the first scaling profit where you could have a partial log, and minus 0.62 is target 2, minus 0.27 is target 1, and minus 2 is symmetrical swing. So if you wanted to make analysis by using this Fibonacci tool, you should always focus on a higher time frames from 4 hours time frames or bigger time frames, because the bigger money moves are the higher time frames. Also, institutions move the market at higher time frames. So this is a market profile, which I'm gonna giving you a Polish market profile, which I will show you some examples here. So first, what we need to have is, first we will focus on the low of an expansion leg and the high of an expansion leg, which should be 100% and 0%. So the swing low should be 0%, while the high or swing high should be exactly 100%. With this leg, we are at the dealing range high, and in the 0% leg, which is the swing low, we are a dealing range low. So in order to have the price optimal trade entry zone, we have to wait the retracement leg to enter the price to come at OTE, where is 62% and 79%. So before you enter the price to the up direction and buy this market, you will always look in the expansion leg move in this area if there is order block, fair value gap, bearish breaker, or mitigation block. If then you will also apply it with the optimal trade entry. Together you will have a higher probability entry. So in here, before the expansion happens, there was a swing high which the expansion leg is going to break. So the price is moving from a higher time frame support to create a new swing high that breaks this, and this is validating that this is a higher probability setup. So price is coming back inside the OTE 62 and 79 percentage. So, and in here we know that we need to have our BD arrays like order block, fair value gap, mitigation block, whatever it may be. And then in here is where we are expecting the price to move from and then go upside as the market is in a bullish. So now this is a live example I'm going to show you guys. This is swing low, the market is creating a swing low and then a swing high here. So price goes down by breaking the swing low, and this is exactly sell side liquidity, which is internal. The price is going down and coming by forming or creating a higher time frame support, and then price goes up by breaking this here. So the price is now forming a dealing range high and dealing range low. When we get a dealing range high, which creates a swing high, and then we know that here is a swing low, we have all dealing range low and dealing range high. So we have to wait in order to buy the price to come below 50%, which means the equilibrium, and whenever price comes 50% below 50%, we are in the discount. So in a discount, we will look for our BD arrays. We will look for our optimal trade entry zone. So for the optimal trade entry zone, we know that 62 and also 70.5 and 79.5% are our OTE. Price is touching the OTE, so our first OTE level was our entry here, as you can see, and this is exactly what confirms us. So if you have price at OTE in this area, you will look for any of confirmations of BD arrays. So we have here order block. This is a don't close candle, and this is exactly an order block. Also, there is a gap which you can see over here, which is a fair value gap. So together, the optimal trade entry with the order block and fair value gap, this is a higher probability setup that is telling you you should have an entry of a long or buy. This is a live example in total what you can see. If you wanted to know exactly how you can measure your stop losses and also your entries, yes, it's very good. So you have two options to place your stop loss. One is to have your stop loss somewhere below the order block, and to have also the initial low. You can set whatever stop loss you can prefer. If you have a big account, if you have exactly a long idea of holding trades, whatever you want, but always try to minimize your losses. So this is the entry point where we can have our entry point. Our exit points will be when price breaks here, which is buy side liquidity, and finally we take our profit there, and then we collect our money at all. I hope that makes sense and it simplifies how the optimal trade entry is. I am so glad to have you and watching for this. You are welcome, and thank you for all of you guys. Thank you.